When 46-year-old Todd Pierce's life ended in a fiery car crash 18 months ago,
I like to remember in that way.
It was only the beginning of a lengthy battle for his family over the accidental death insurance policy provided by his employer. Despite an official ruling that it was an accident, the insurance company, MetLife, claimed it was suicide and refused to pay the $224,000 claim for a death they claimed was the result of intentionally self-inflicted injury.
It wasn't even about the money. It's about an allegation. How can you say that about somebody? How can you say they took their own life when they've, been such a survivor?
A survivor, she says, because Todd had recently beaten cancer and was planning for the future. She sued MetLife and was finally awarded the money a year after her husband's death. But according to an investigation by correspondent David Evans published in this month's Bloomberg Markets magazine, many life insurance beneficiaries whose claims are denied never see a dime.
You have to wonder how many people just throw up their hands, give up, and walk away.
Are you ready for an extreme makeover of the mind? With the producer and host of A Better You podcast, the transformational coach whose assignment is to challenge people to change, grow, and evolve into the individuals they were created to be. Here is Dr. Anthony McFarland, providing you with practical tools and wisdom for everyday life challenges, for you to win in life, relationships, and finances.
I want to get to now, we want to address life insurance. And so at this time, I'm going to have my partner, someone actually who helped train me and get me started in the business, Mr. Rory Douglas and Miss Andrea Douglas. And Andrea, are you there? We're going to have her come on now. So good to have you.
Hi.
This sister is knowledgeable. She's a beast. Excuse my acronym saying beast, but you're a bad girl, and I had to have a woman on here to mix it up and add that flavor, that only you can add. And so I want you to talk to the audience, and a part of me having all of you on is because I know that some individuals that I'm connected to who I pastor aren't necessarily going to come to me. It's for insurance advice because they don't really want to reveal really where they're at. And I get that. And so that's why I have asked you all to be a part of this master class. So talk to the people about the difference between having a term and permanent issue policy, and then the importance of those who are over 40, making sure they get permanent insurance before they have any health challenges, specifically if they have a term policy. So with that, I'm just going to unleash it to you. We have some other questions that are coming in, but we'll address those in a moment. You can take it away.
Well, thank you so much, Doctor, for having me on. I appreciate you and your family. And it was good to see Michael also, too. I haven't seen Michael in a while as well. So good to see you, Michael.
Yeah.
Hello, everyone. Well, yeah, so I'll say this first. When it comes down to insurance, you can never be over-insured. You can never have too much insurance, okay? And kudos to you guys who do have insurance. Insurance is a big part of us living, whether it's health insurance, medical insurance, life insurance. Life insurance is a big part of everyone's life. I think everyone would agree. If you think of, us living on this earth, at some point we're going to have a birthday and a so-called death day, okay? So there's no question about whether you should have it or not. The question is, not even if you need it, we all need life insurance, but the really big question is that do you actually have it? And if you do have it, what kind do you have? Okay. So to answer your question, Dr. McFarland, you mentioned term, you mentioned permanent policies. Okay. So term was one of the very first type of policies out there, kind of happened somewhere around after the Vietnam War. And term just means time. Okay. Just a basic understanding of what term is. Term insurance means time. You have 10-year, you have 15-year, 20, 25, 30-year. That means that at some point, if you have a term policy, it will expire, okay? It does not carry you for your whole life. It is a term, hence the word term. And in a term policy, there's no cash value in a term policy. So at some point, when it expires, you will just pay into it and that's it, okay? We call it just means time. So you're paying into a policy. And term is great. One thing that we never do in our business, we never bash any type of life insurance or insurance at all. It's really about understanding that, to have it, of course, and if you do have it, make sure you understand what you have. And then we help our clients understand that, break it down education through financial literacy. And then we carry on because every family is gonna need something, right? Every family's needs are different. Whether you're married, you have kids, you're working, so there's different reasons why we might need life insurance, okay? But one thing you want making notes, write this down. Life insurance means to transfer wealth. It's to transfer wealth. It's not the way it used to be anymore, actually. Back in the day, my grandmother, my great-grandmother had life insurance policy, and they just had whole life policy, which are very, very popular. And when they passed, there was a little bit of cash value left in there, but unfortunately, it wasn't a lot. But it took care of the burial. And that's really what most people are just wanting to have life for, to pay for their.
You're freezing.
Uh-oh, can you hear me now?
I can hear you. Your picture's frozen, but we can hear you.
Okay,
there you go. You're back.
Okay. So term means time. There's no cash value in a term. Hear me out. It will go from a 10-year up to 30-year. If you have either one in between, it will expire. Now, the good thing about term is that you can use term for anything. And it covers you for life insurance. It can be to transfer wealth. It can be to cover your home, okay? It's just there to be able to take care of things you need if you were to pass, okay? Also, too, one thing about term that's a disadvantage is that it does expire. And another thing about term is that at some point when it does expire, it will change. So the amount of money that you're paying into a policy right now, let's say you're 30 years old. Well, when you turn 50 years old, you have to assume you're gonna, after 20 years, it expires, you're gonna have to renew that term. So that actual price or the premium might actually be higher, okay? So that's a big disadvantage. And most of the time, people who have term, we review their policy and we say, hey, you know what? Based on your need and with your family, you're married, you have kids, or the things you wanna be accomplish, we might need to turn you into what's called a permanent policy. Because in 20 years, you're left with this policy expiring. What if your health is, the message must be really good because it sounds like we got a little
warfare, right?
Fears in here. Yeah, a little warfare, but it's okay. It's okay. We're going to get there. I won't be before you guys too long. But what you do is looking at what someone has on a term policy. I gave you guys the disadvantages that it can expire. If it does expire, we're looking at the premium being a little bit much higher, right? Your health may not be the same. So if you did have health challenges, when it's time to renew, it might change that drastically, okay? So we recommend some people who do have term based on their need, based on the family, the purpose and the reason to have this. We may say, hey, we might want to upgrade you from what's called a term to a permanent policy. Permanent just means just covers you for your whole life, okay? Mm-hmm. Statistically, the whole life number and for the average human being in the life insurance world is about 120 years old. I know that's kind of strange, but that's the average number. So when you get a policy and it's permanent, it'll say at the 120 or 21 years old, providing, if it's custom. But why go from a term policy to a permanent policy? Okay, a few good reasons why. So a permanent policy, well, Dr. McFarland said it earlier, as we get older. So as we're younger, we have more responsibilities. We get married, we have kids, we have a house, we have bills, right? We have a lot going on. We may have loans to pay out for college. Well, we should be getting more coverage at that time of our lives. As we get older, okay, we pass down a little bit older in different line, our children are getting older. We should have less responsibility. So hopefully you got less bills to pay, your kids are out of the house, right? So we should be covered for something more permanent, because providing we get older and we were to get sick, we want to make sure that we have a plan that covers us for kind of like covering a lot of different things, okay? So having a permanent policy is a big advantage. That means that you're covered for the rest of your life. There's no expiration date on that. That's the first advantage of having a permanent policy. It covers you for your whole life. Okay?
And you're locked in.
And you're locked in. Now, there are different types of permanent policies out there. I won't go into specifics, okay? But a permanent policy would ideally be better. Another advantage it has, well, you're able to build cash value in a permanent policy. Now, there are different types of policies out there, from a whole life to a universal or index universal per se. And then if you have any questions on those, particularly, we can go into those at some point. But a permanent policy builds cash value. So at some point, watch this. Can you imagine the average American is 1 to 2 paychecks away from being homeless? 1 in 3 are in debt. Most Americans are not planning for retirement. They don't have a 401k or an IRA or retirement plan. If they do, they have no idea how it works, and they have not saved enough money to retire. Okay. So we look at someone and say, hey, how much do you need to retire in 10 years, 20 years? They don't know. They have no idea. So we look at an analysis for the client. We say, hey, based on what you might need for you and your family, you're going to need something to be an additional bucket of funding for you for retirement. Your 401k may not be enough. So we can use life insurance as a way to design someone's potential supplemental retirement. Okay. So a great thing about a permanent policy, it covers you for your whole life. You can build cash value. That cash value can be used to be a supplement for your retirement. If you don't have enough in your other retirement plans, you can access that money at some point tax-free in the future. Okay, you can borrow against it. All right. Another big advantage of that would be you're able to have what's called long-term care. Now, as we get older, we know things can happen, right? We can have a medical issue, critical, a chronic, or terminal. What if you get ill? What if you get sick in your 50s or 60s? Well, we heard about health insurance. It's great to have it, but guess what? Most Medicare plans or even hospital plans, they're not going to cover you for past 100 or 150 days in a hospital. So you need to make sure that you have a plan in place that covers you for longer time. That's called long-term care. Long-term care, very popular. Look it up, long-term care. Everyone should have long-term care. If you have good health, you need to have long-term care. So we offer our clients things that kind of have all the bells and whistles in a permanent policy. You know, long-term care is like a rider you add to that, but it can pay you while you're down. So imagine you get sick with, you had a car accident or whatever. You couldn't go back to work, say for 6 months. You're like, where am I going to pay this extra medical bill, or it go past 6 months? Well, imagine being able to access the cash value in your life insurance policy. How cool would that be, right? So that's another big benefit of having a permanent policy also too. And not only that, there's been so many other newer companies and providers out there which offer us to be able to grow our money to where our cash value can grow at a higher return. Okay, if I ask you guys how much return, how much interest do you think like a Bank of America or like a Chase Bank give us on a checking or savings account? You know, the number, I don't know what you're going to say in your brain, right? But if you said over 2%, that's not accurate. I'm still here. Okay. So the bank give us less than 1%, like 0.005 or 4%, less than 1%. Right. And inflation right now in America is at about 5 or 6%. So we have to get greater than 5 or 6% on our money to beat tax and inflation. So when you have a permanent policy, you make sure you have a plan that's going to give you 4 things. It'll give you growth. Your money can grow over time, okay? It'll give you safety, which means when I put my money in the plan, I can grow it, but I'll never lose it. It's not on the market, I never lose it. It can give you tax advantages. If I want to access that money for my retirement, I take it out tax-free. If I want to borrow against it, I borrow against it tax-free. If I die, it's a benefit to my family, tax-free. Okay. And
you can't do that. And I just said, you can't do that with a 401k. You can't do it with a 403b, with a TSA. You can't do it with any of those. An IRA, you can't do it with any of those without being taxed. So great point.
Yep, that's correct. And the 4th one you need to make sure you have protection. And that means that if we all plan to live longer, but do we have something we can access if we were to get sick? And that's the long-term care component. So those are 4 things we feel like everyone should have. And at the end of the day, you've got to make sure that you cover yourself, cover your family. Your kids should be covered. You should be covered. If you're married, everyone in the family should have coverage. If anything, life insurance increased about 85% during the pandemic, and it has not gone down, the need for life insurance. So it's going to continue to rise, but just understand what it means, understand why you need it, and then understand where you are financially. Look at all your debts, your income in 10 years, your mortgage, your education for kids. Add those numbers up, and it might scare you, but that's the number that you should be protected for.
Andrea, Marcia asked a question, but what about a term policy you can convert to a whole life permanent policy after a certain number of years incrementally? This helps you as you make more money, right?
That's correct. Yes, you can get a term policy, and then at some point you can upgrade that term into a permanent policy, and then you'd be able to build cash value. That's correct, over time. That's a great benefit. And then
when you have a term policy, it's important that you all understand that you're able to convert it. A lot of old term policies, it did not have that feature, that benefit, where you can convert it in 10 years or 15 years or 20 years. So those of you who have old term policies, I'm telling you now, and that's for those that are at least 40 and over 40. Listen, you need to convert those. You need to get out of that term and get into a permanent policy, especially I got to watch how I say this. You don't want to come down with a life-threatening illness, diabetes, all of these different types of illnesses, diseases, and then want to try to get permanent insurance. You're going to pay for it. And in some cases, there's insurance companies that will not cover you. They will not cover you. Jessica asked a question: does it make a difference if you go from term to permanent or enter into the policy at permanent? I'll let you.
Age-wise, yes. Age-wise, it does. Okay. And if your health is not that good, it would be a big difference. Okay. So if you have good health right now, your health is your wealth. So make sure you have something. Okay. If you are able in a position to have a permanent policy that build cash value, I would go for that any day. But here's another thing I do too. I'd also have a term also too. If I have a home, in my home, I have $300,000 to pay off my home. How is my home going to get transferred? Who's going to pay for that home if I die? Right. So if I have a term policy, I can cover the home. Right. So the term helps me to be able to leverage the home. The home can be paid off tax-free, provided I pass or my husband passes. And that just goes to the family member tax-free. I still have a permanent policy over here that I had been building for my additional insurance, but also to be able to access for retirement potentially at some point. So you can have both, honestly. But age would be a big factor in your health between the two and applying at the time.
And I want all of our guests to know that Micheal, Engerson, as well as Andrea, you can find their contact information in the content for this event when you registered for it, as well as, so you can go back to your email and you'll be able to contact them. And I encourage you to contact them for additional consultation. Are there any other questions out there that anyone may have? Can you please pop that in if there's any other questions in regards to that? If you will, Andrea, can you share with people real quick, just reiterate the benefit of having an insurance policy that ties into retirement, an IUL, the way we create infinite banking and.
Sure. Yes, that's a good point. So my husband came up with a concept called Be Your Own Bank many years ago, and it went viral on social media. Be Your Own Bank is like a concept kind of attached to what we call infinite banking, which means that by way of life insurance, I'm able to have a policy that I can pay into and build cash value. And at some point, I can fund this thing. It builds. I'm watching it. I manage it. And it's kind of like on my own bank, not a literal bank, right? But imagine you had something that you were putting in funding and that's building cash value. And every year you get to adjust that if you want to see how much you can get more of. And then you can kind of use it. So Be Your Own Bank is a concept that we use for our clients. So they understand, hey, you can be your own bank. As a matter of fact, be your own money manager, right? No one should be controlling your financial future but yourself. So once you get educated and you know how to do that, then you control your own financial future. But Be Your Own Bank allows you to be able to tap into something that you control, you manage, right? And then you're in a position to be able to use that. Now, infinite banking says this. I have a life insurance policy. It's a permanent policy. I'm building cash value at a high return. Okay. There are plans and companies out there that are giving, very, very high interest. There's some have caps, some don't have caps. Okay. But infinite banking says, I can look for business owner, it's a perfect thing. Business owner makes $500,000 a year, for example. Let's say after profit and loss, he's got about, I don't know, $100,000 in net to pay in taxes, right? Who wants to pay $100,000 on taxes? So what we do, we say, hey, you know what? How about we set you up with something that's more infinite for you, that you can leverage that versus you paying tax on that. That can become some actual go towards an insurance policy. An executive bonus plan, for example, your business pays for it, right? And then what happens is that the business pays for it, is tax deductible on the business. You're an executive. So that money can be paid from your business to cover your life insurance and build you an infinite banking plan that's permanent for you over here, that's funding and growing, that you can access in your retirement. Having retirement right now is key. Here's a rule. Write this down. It's called the 10-20 rule. The 10-20 rule says you should have at least 10 times a monthly income saved up for emergencies. So if you're making $3,000 a month, you should have at least $30,000 saved up for emergencies, okay? The 20 represents 20 times my annual income to retire. So if I make $100,000 a year, right, I should have at least $2 million to retire. Now you may say, I don't have near that. I'm not even no way near that. Don't worry. Life insurance is used to be able to supplement that. You put a plan in place, you build and you work towards that for your retirement. Everyone needs to have a healthy retirement. And guess what? The average American now is retiring with less than $250,000 in a 401k. And guess what? If you have a 401k and you have retirement in it, it's not all yours. At some point, you got to pay Uncle Sam. Right. If you don't want his federal taxes, which is 20%, the state will want their taxes. So if you're in California, it's 9.75, whatever, 9 point some percent. And if you're not 59.5 or over that, you're going to have a 10% penalty. So if you had $500,000 in a 401k, if you want to take it all and cash it out, well, good luck to you. You're going to end up paying half of that in taxes almost. So we recommend, hey, if you have a retirement plan, know about it, educate yourself about it. Don't pay tax on it. There are ways you can not have to pay tax or delay the tax for a longer time, okay? But having an insurance plan is another way, as a supplement to protect you, to be able to use it as leverage for retirement long term. So perfect way to do that.
Outstanding. Yeah, I think it's also important that you understand that life insurance, oftentimes when we say life insurance, people think death, right? And there is truth to that as it pertains to should a loved one, pass away, the policyholder die, then it gives the family the security and safety and relieves them of any stress of the overhead and expenses that they're going to face that next month or that month. So that is a big pro, but also you can use life insurance to build wealth, create generational wealth. All of your major billionaires use life insurance to this day to build their wealth. And I think there's some myths out there when it comes to life insurance that kind of keep people in a sense. And you have myths out there like my spouse stays at home, and so she doesn't need life insurance. That's not true. The reality is that stay home parents provide a lot of valuable services that are necessary to the success of a family. And so if your spouse works full time and you manage the household, watch this. Think about, watch this. Would they need someone to clean, cook, take care of, and chauffeur the kids around? Yes. So, insurance can provide funds to allow the working spouse to take time off and pay for help with the household tasks, right? So again, there's just a lot of myths out there, that, life insurance, my life insurance through work is sufficient. No, it's not. Stop. Yeah. It's probably only $5,000 or $10,000. If you're an executive, I think Mike can speak to this, maybe it's $25,000 or $50,000. But the reality is everyone's needs are different. So your life insurance at work may be good, right? But I don't know how much $10,000 is going to do to bless your family.
And also too, McFarland. So as far as those who are working, you have life insurance on your job. Well, here's the thing with life insurance, right, on your job, that's called group insurance. It's part of a group. Right. So if you were to no longer work there and you left, that's going to stop also too. Okay. Same thing like health insurance would at the same time. Right. So you want to make sure that if you have group insurance or work insurance, you should have a plan that you control independently. So that's a big factor. And then most times, listen, whole life policies are great policies. I'm never going to tell you anything bad about policies, but they were never designed to have long-term care or living benefits, right? Or be able to use as a supplement for retirement. There are better things out there, upgraded and have benefits to you to be able to do that for you, okay? But when you have insurance on a group plan at your job, if you were to leave there, you get transferred, you get fired, that's going to kind of go away. So you want to make sure you have something more permanent that you control independently, that has more better, bells and whistles that you can actually manage and take advantage of also.
And very, very good. Thank you so much. I also, before we close tonight, I just want to add and make clear, and I also want to see if Chris wants to add anything to this conversation since I have him here in the backstage. But there are those who believe that they'll get a better deal, purchasing medical or life insurance or, supplemental insurance online. Hey, man, I'm going to Google and I'm going to find the best deal because they're going to give me $500,000 for $10 a month. Listen, while the internet provides good information and the marketing is phenomenal, it's not necessarily cheaper at the end of the day. So you'll likely pay the same in premiums if you use an agent or purchase a policy online, but it will not be customized for you. And so that's what's important for you to understand. Michael, Engerson, Andrea, myself, listen, the right agent can help you figure out how much insurance you need, as well as assist you with the application, as well as help you understand the terms of the policy and make sure that your family is really going to benefit from this, as at the same time helping you protect your assets. And I always tell people, you are your greatest asset. And if you don't have that revelation, you're in trouble. So you need to take the necessary steps to make sure that you have the proper coverage. So Engerson, you were just saying you can take your Aflac policy with you. They belong to you. So a very good point. So if you get Aflac through your employer, if I'm understanding you correctly, they're able to take that policy with them.
You're able to take the policy because the policy is a withdrawal, a pre-tax withdrawal. So you're able to take the policy with you. It doesn't belong to the employer. Even if the employer is paying a percentage of it, you still take the policy with you.
Well, I'm going to say it, and a lot of people have heard it over and over, but I'm going to say it anyway. Insurance is something, it's better to have it and not need it than need it and not have it.
And the church said amen.
Amen. Amen.
Said amen.
Yeah.
Andrea, any last comments?
No. I mean, educate yourself for sure. Make sure you're educated. Do a little bit of research. Get with a professional to understand what you have. And like Mr. Meade said, you just have it. It's no excuse. We have no excuse, guys. My husband always says this: if you coulda, woulda, shoulda, but you didn't. Imagine if you died and what burden you leave to your family. And my husband always said, you should have to come back and look at the pain you caused your family because you didn't have it, because you woulda, coulda, shoulda, and you took too much time to do it, and you delayed it. Don't let that be you and your family. Get it right away. Cover yourself, okay, and your family, and then make it a point that that's it, and that's your final stretch, and that's all you have to do. Other than that, just keep on living and be excited and stay alive. So.
Awesome. I want to share with everybody. I have 3 things to share as we close. I guarantee you it's gonna really empower you. I want to encourage you all to purchase a book. It's entitled "What Doctors Don't Tell You: The Truth About the Dangers of Modern Medicine." and it exposes the often disturbing truths about commonly used medical treatments for such conditions as high cholesterol, heart problems, asthma, and arthritis. Therapies that can be potentially dangerous to your health. So I encourage you guys to pick up that book. I tell you, it is a game changer. Another good book to get is What Dead Doctors Don't Lie. That's a good one for you to get as well. And then we touched on a little bit earlier, and I said to Engerson that I was going to touch on it, and more importantly, reach out to these professionals. You can reach out to me as well. And if you do reach out for a consultation, they're going to report back to me, and I'm going to make sure that you receive a complimentary 1 year $35,000 accidental insurance policy, which I can share with you at a later time. So if you reach out to them and set up a consultation, I'll make sure that you get that benefit. So for those of you who are in the room, I encourage you to contact Andrea, contact Engerson, contact Mike. Again, their information is in the feed. And Marcia said, great information. So glad you did this. Thank you so much. And again, I'd love to hear your takeaways. If you're in the room, there's several people in the room. I'd like to hear what your takeaway is. But here's my closing takeaways for you all. Understand that life insurance or medical insurance can offer a measure of financial assurance, medical reassurance to your loved ones if something were to happen to you. And then it's important that you understand the younger and healthier you are. I wish I had this revelation 30 years ago. When you're buying life insurance, the lower your premiums are likely to be. Okay. And so it's important to compare various types of life insurance. Again, Andrea said it. I've said it at the beginning. All life insurance is not the same. All life insurance is not the same. So it's important to compare various types of life insurance to find the policy that's right for you and your financial situation. Same thing with medical. When we talk about permanent life insurance, whole life insurance covers you for your entire life and accumulates cash value over a period of time. Some it could be 2%, others 4%. And understand this, those of you who have term insurance only lasts for a certain number of years. 20 years, they have new policies up to 30 years. But let me share some with you. You look up 30 years, you're excited about paying $75 a month for $250,000 in insurance. But 20 years from now, please hear me, that $17,000 or whatever it was based on what you're paying, that's down the drain. And now if you've contracted any health challenges, man, it's almost impossible. So it's possible to own more as well than one life insurance policy. And you more than likely will be required to complete a medical exam to qualify for each one, but it's possible. And I encourage you to have more than one life insurance policy. And then for the person that says, hey, I don't really believe in life insurance policy. Well, let me tell you this, believe in this. You need to have a final expense policy so that when your butt die, I'm sorry, let me back up. So when you when your number is up, you're not leaving your family in stress.
Right.
You need a funeral planning package. So, contact us, watch us, reach out to us and we can help you. All right. Let's see here. This dear brother said, yes, definitely informative. I will surely need your services. Praise the Lord. Okay. All right. Thank you guys so much. This has been phenomenal. Yes, sir.
Andrea, can I connect with you and your husband? I would like to learn get a little more information and to network with you. Maybe there's something down the line, we make some money together.
Definitely.
Just want to know.
All right.
don't want to close no doors. I'm just trying to open them all.
Awesome.
All right,
Okay.
family.
I'll get your information from Pastor.
Okay.
Yeah, and it's in the bottom too. Let's see, we have someone else. Thank you so much for this masterclass. I used to be a licensed insurance agent. Very good class. Thank you so much, El. Thank you. Good to have you on as well. All right, that's it. That's all, man. Thank you for joining me on the ABU. Remember this, when there's a better you and there's a better me, there's a better us and there's a better world. Until the next time, God bless you. Keep walking by faith and not by sight. Bye-bye.
Bye.
Thank you for tuning in to A Better You program with Anthony McFarland. Don't forget to like, subscribe, and follow on your favorite podcast platform so that you never miss an episode. Thanks for listening.